Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly newsletter for Thursday, March 2nd, 2017. Sorry about not getting the newsletter out, or the video report out last week. I was traveling. So let's get started. We're entering a time period that Woody's been looking for, and he calls it the kill zone. And we have a couple big, say, type of moves like that are labeled kill zones and black holes. And the thing is that they're great shorting opportunities, but they're hard to actually pick the top. And because that when these kill zones and these black holes, what happens is you have a time frame that they're due, they're scheduled to hit. And in November, Woody actually said that it's going to be coming in sometime in early 2017. So we're here now. But once we're in the time period, now what happens is we start looking for the pattern that is going to uh, let's say, confirm that the kill zone is taking place. Now, we've had a couple false starts where we did think it was it, but this is the market. It's going to do what it's going to do. But the higher it goes, what happens is it lures more and more bulls into it and less shorts, and that is really the ingredients that's needed for a kill zone or a black hole drop is everybody is on one side, so nobody's anticipating the move. Because if everybody's anticipating the market to drop, they're going to be short the market or they're going to be out of their long positions. And guess what? Sentiment's not going to be at a consecutive 90% bullish readings. Human nature just doesn't work that way. You're either bullish and you're buying the market, or you're bearish or scared to be in the market and you're out of it, and that's it. There is no in between. So everybody's going to be bullish and nobody's really going to be short when these big drops happen. And he's predicted every one of these big ones in advance. But like I said, they're patterns that have to form before these are confirmed. And like I said, we thought we've had a couple of them that looked like it may have been starting it, but it didn't, and it doesn't really change the dynamics of anything. It doesn't eliminate that this kill zone isn't coming. And one of the ones that I love to point out is this is going all the way back into 2014, and Woody called this in August, that it was going to be taking place at the end of September, early October. So we had the drop, and then we came up, and everybody was questioning that we are going to get a drop. And from there, we saw the S&P drop some 200 points in a matter of 3 weeks. Nobody was anticipating this happening. Same thing with this move here and this move. Nobody was ready for it, and everybody was doubting that the market was ever going to, was going to drop. And human beings in the markets are irrational, and there's always going to be an irrational element at work. And that is what creates these market opportunities, and that's why Woody has been studying these markets for 40 years, and he's able to look in the past what is taking place through sentiment, through technical timing indicators, through patterns, and by knowing what has taken place in the past, he's able to predict the future. And like I said, this is not okay, it's happening on this exact date. We have a time frame that it's supposed to happen, and then from there there's a process that goes through looking for the topping pattern. Now the timing part of it is the technical timing indicators. So in November, he was saying that this kill zone was going to be taking place in the first quarter of 2017. Then we want to see what sentiment is doing. We got to see everybody jumping all over either the bullish or the bearish end of sentiment if we're looking for the reversal. And then we just add technicals and we start looking at like underneath the hood of the market to see is it ready to roll over. And those are really the ingredients that we use to inform subscribers as far as whether you want to be closing out your long positions or putting very very tight stops or getting short. So like I said, in November, this was predicted that what is the best way to get a 20 or 30% decline in the market, and that's to spike it to 2300, 2350. November 17th, most people were looking for the market to crash because Trump just became president, and most people were there, and they didn't really jump on board until December, and the S&P was probably 100 points higher. But the what he was saying is a good decline will happen in 2017. So this is the timing part. In November, we knew that we were going to get an awesome rally that's going to happen into the first part of 2017. So on December 6th, one of the things that he had said, it goes, a wonderful bubble is it should hit in early 2017, and he's looking for the February time zone. So we went from saying it's going to be in 2017 to now bringing it closer and saying in February, or into Q1 of 2017. So we now are in the time zones on it, and again, the 20 to 30% decline is best set up when we get these massive melt up moves, and that's exactly what's taken place. So this is our most recent report, and what Woody had said is that we had another 99% bullish sentiment reading today. So it's just, when I show you the chart, you're going to be kind of amazed by it, but no one will likely time the absolute high. So we're not trying to do that. We're going to try and say, things are starting to look suspicious up here, but we're not going to give you the exact time. It's just we're going to prepare you for what's coming, and that's really the best I think that we can do, or any newsletter can do. So the micro kill zone, it's going to occur. Unfortunately, I cannot give you these dates. So remember, it started off in 2017. From here, it came into the Q1 2017, and now in the most recent newsletter, we actually have a specific date that we are following for it. And like I said, most people, they're in this euphoric area right here. They're not even worried about any kind of drop. So this is what the institutions do, is that once we get into this thrill area, they start closing their long positions. When we get into euphoria, they start shorting. And then when they get into the panic, they cover their shorts and they start buying down here. So it's the same cycle that repeats over and over again. And that's why most of these people that are only looking up right now, 90% of them are going to lose probably 90% of the gains that they had from February. And the main reason is because this is the type of move that happens, and this is the type of move that is that's coming real soon, and nobody's going to expect it. And before you know it, the S&P is some 200 points down. So here's the sentiment part of things. Like I said, look at all these 90% bullish readings. This is why everybody's going to get trapped in this big move to the downside when it plays out, because look at all these bullish readings. Now this is a longer term. This is a moving average of the sentiment, and you can see it's the highest levels we've seen going all the way back to 2014. So I just want to bring you back to this chart. That was the first one here. Here was the second kill zone. Here was the third major drop on it. Here is the fourth kill zone. So this is all lining up the way it should. And, as you can see, nobody's prepared for this market to drop. People are going to be too long, and not enough people are going to be short. And that's what causes these massive moves. So this is taking a look at underneath the hood. This is the advanced decline line on the New York Stock Exchange. Here you can look at this divergence right here. So you have the S&P that's been heading higher, and underneath the hood, it's starting to crumble. And that is not something you want to buy into. Yes, these big moves, they're fun to watch. They're great on paper. If you're long, it's even better. But when you start looking underneath things, it's not as, say, rosy as it really looks. So taking a look at the shorter term charts here, and this is just a 15-minute chart. You can see that we have some bearish divergences. This caused the market to decline today. If they pull back more, keep an eye on the 2370. Below that, we're probably going to get some panic, but we're probably still going to get a bounce back up to test these highs. So if they head up, look for a test of the highs or maybe even a break. But if they head down, this is where you want to keep an eye on where buyers may step in. But if we take a look at the 60-minute chart, there's still plenty of room to go before we get into any oversold levels. But The reason why I'm saying there's a chance that they may come up and test these highs or even break them, we had a series of bearish divergences in place. Yesterday's big move wiped them out. So if it came up and made a minor new high, it would actually fit the whole profile. But the fact that we have 1, 2, 3, 4, 5 sets of them, if they don't come up and actually make that new high or make a bearish divergence, don't don't think it has to, because like I said, we're in a time area where that massive drop can start anytime. We have wave counts that are in play with it. So right now, it's a time that you really have to be uh, careful, because if you're long the market and you have gains, you stand to lose all those gains real quick. If you position yourself right, you can make a ton of money in a very short amount of time. Like I said, we have the date that we're actually specifically looking for right now. We know we have sentiment that's in our avenue here. We have the internals that are not really say cooperating with what the market's doing, and we have wave structures and regular technical divergences that are saying to look out. So things are going to be getting very hairy. We're just keeping it $79.99 for the first month. You can use the 12017 coupon code. As usual, I am going to be giving anybody that signs up with the sentiment timing a free membership to MarketsPath. I do video reports like this each night, do morning notes, and we also have a pretty active trade room that's pretty fun to go into. So with that, until next week, be prepared, because things are happening and they're going to happen fast, and you really want to know when this next date is coming, because that's going to be the one when I come back on here and say, sorry, that was it. That was the date to expect a drop. So with that, have a great night, and I'll talk to you guys next week.